Yesterday, the euro tried to consolidate above Monday's high but failed. Traders digested data on German and consumer sentiment that was in line with analysts' forecast, weaker than expected bank lending to companies and households in the euro area, as well as the M3 measure of money supply. US consumer confidence retreated in February after 3 straight monthly increases. The conference board said its consumer confidence index slipped to 106.7 this month from a downwardly revised 110.9 in January. Against this background, the US dollar dipped. Nevertheless, the euro-dollar pair remained range-bound. As for the British pound, its attempts to break above the one-week high were unsuccessful. A speech by Bank of England Deputy Governor Dave Ramsden failed to support the pound sterling. The British currency recovered slightly from the daily lows on weak data from the United States, but also remained stuck in a sideways range. Now let's take a look at today's macroeconomic calendar. All eyes will be on US GDP growth data. The US economy is estimated to have grown at an annualized rate of 3.3% in the final quarter of last year, down from the 4.9% rate in the third quarter. If the data is revised down, the greenback will come under pressure. However, it is unlikely to have a severe impact on market sentiment. After all, the US economy and its labor market remain resilient, thus allowing the Federal Reserve to keep interest rates high to bring inflation back to the target level. In addition, traders may take notice of data on US goods trade balance and comments from the several Fed members, including New York Federal Reserve President John Williams and Atlanta Federal Reserve President Raphael Bostic. From a technical point of view, the 1-hour EUR USD chart shows that it's worth focusing on the level of 1.0820 and 1.0791. A decline followed by a false breakout at 1.0820 will create a buy signal. Or one can open long positions on a rebound at 1.0791, counting on an intraday correction of 25-30 pips. Given low market volatility, the euro will hardly fall below this mark. Going short will be relevant after the price rises and forms a false breakout at 1.0856. Alternatively, short positions can be considered on a rebound at the high of 1.0886, posted on February 22 with a view to earning on a 25-30 pip move. If the price breaks through and fixes below 1.0820, it will also be possible to go short. However, this scenario is unlikely amid subdued trading activity. Speaking of the British pound, the situation is similar. A false breakout at 1.2657 will create a buy signal. Long positions can be only considered on a rebound at 1.2636, hoping for an intraday correction of 20-25 pips. If the price fails to consolidate above 26.83, a sell signal will be generated. Going short on a rebound will be relevant at 1.2706. In this case, one can expect an intraday correction of 20-25 pips. Best of luck.